You know the picture, right? The white picket fence, the backyard, the perfect place to call your own. But what happens when that dream comes with a price tag that's, frankly, terrifying? We're talking $1 million. And look, that's not a number just for mansions anymore. It's popping up in regular neighborhoods all over the country. So let's just get right to it. Who on earth can actually afford a $1 million house these days? Forget the glossy real estate photos for a second. What does it really take? It feels like this giant mystery, but we're about to crack the code. And trust me, the answer? It might not be what you think. And the solution here isn't about wishful thinking or getting lucky. Nope. The answer, as our source material says, is all about some pretty brutal math. But don't worry, we're gonna break it all down step by step. All right, first up, the investigation. We're gonna pull back the curtain on that $1 million price tag and see what it really costs to get the keys in your hand. It all kicks off with this number, $1 million. It's a huge round number that looks really impressive on a for sale sign, but as we're about to see, it's just the tip of a very, very big financial iceberg. Right? You don't just show up with a check for $1 million. The very first barrier, and this is the one that stops most people dead in their tracks, is the down payment. This is the chunk of pure cash you have to bring to the table yourself. For most conventional loans, lenders want to see 20% down. And 20% of $1 million is $200,000. Let's just pause on that. This isn't a loan. This is cash. 200 grand that you need to have saved up, ready to go. It's a staggering amount of money, and it's just the price of admission. So, let's say you've actually managed to save up that 200 grand. First of all, congratulations. But now you have to borrow the rest of it, $800,000. This is your mortgage, and it's the number that's going to hang out with you for the next 30 years. Now, your monthly payment isn't just about paying back the loan. Lenders roll it all into something they call PITI. It stands for principal, interest, taxes, and insurance. That means you're paying back the loan, paying the bank to borrow the money, paying your property taxes, and paying for homeowners insurance. This is so important to get because it means the monthly bill is always a lot bigger than you think. So when you add up all those pieces, the loan, interest, taxes, insurance, you land right about here, around $5,500. And that's not a one-time thing. That's your bill every single month for the next 3 decades. Wow. Okay, so we've got our monthly cost, but here's the catch. Just because you think you can handle that payment doesn't mean a bank is going to give you the loan. Now we get to the second part of this whole thing, the lender's rule. They have their own math to decide if you can really handle all that debt. And this is the magic formula right here. It's called the 28-36 rule. Part 1 says your total housing cost, that $5,500, should not be more than 28% of your gross pre-tax monthly income. Part 2 says your total debt, the mortgage, car payments, student loans, all of it, shouldn't be more than 36% of your income. For today, we're just gonna focus on that first number, 28%. So here's where it all comes together, right? We have the payment, $5,500 a month. We have the rule that payment can't be more than 28% of your income. So, what's the magic number? What salary do you actually need to be earning to make this work? All right, this is it. We've unpacked the price tag, we've learned the lender's rules, and now it is time for the big reveal. Let's finally figure out the income you need to unlock the door to that $1 million home. And there it is, the answer to our $1 million question. To comfortably afford that home, according to the standard rules of lending, your household needs to bring in about $235,000 a year. Just let that sink in. So we have our answer. But an answer without any context is just a number, right? So now comes the reality check. How does this income level compare to, well, the rest of the country? Is this dream even remotely attainable for most people? And this is where the math gets really, really brutal. On the left, you see the income required for that $1 million home, $235,000. And on the right, the median household income in the United States, which is only about $75,000. That isn't a gap, it's a chasm. It's what separates the dream from reality for the average American family. You know, this quote just says it all. For millions of people looking at a chart like that, it feels exactly like this. The old markers of success and financial stability, like owning a home, feel like they're not just further away now, they feel like they're being played in a completely different league. So what's the ultimate takeaway from all this? I mean, it kind of forces us to zoom out and really think about what this affordability crisis means for us, for society, and for the future of the classic American dream? Well, the consequences are huge. That massive down payment basically slams the door on most first-time buyers. This widens the wealth gap between people who already own property and people who don't. It completely challenges that core belief of the American dream that says if you work hard, you can own a home. And honestly, it's forcing a whole generation to ask if owning a home is or even should be the ultimate goal anymore. Which leaves us with this one final massive question. When the math is this harsh and the income required is this far out of reach for so many people, are we witnessing a permanent change? Is the very definition of home ownership and maybe even the American dream itself being rewritten right before our very eyes? It's definitely something to think about.